Quite an interesting trading session today. I mean, to think of it, we'd started off with a mild bit of positive, and one thought that today is going to be finally that dead cat bounce, which is going to emerge, but not quite, much to our dismay. It started off mildly in the green and soon after that caved in. In fact, at one point in time, just about an hour and a half before closing bell, you were down in excess of 200 points, almost 230 points to be precise in the Nifty futures, and we even breached that 18,100 level on the index. And then from there, you've seen a 150 odd point recovery that actually played out. Remember, today was weekly expiry as well, and given the damage that you've seen, especially in the mid-cap arena, this was bound to happen, and it was sure a roller coaster ride. On closing bell, though, we were down just about 76 points, about a 0.4% cut is what you saw. 18,250 thereabouts is where we shut shop for the day, and similar was the volatility for the broader end of the market as well. It was surely advantage declines, but the gap between the advanced declines hands narrowed quite a fair bit. Among sectors today, interestingly, it was actually technology which was the biggest drag. So everything from the large caps, from a TCS to Infosys, or for that matter, even the broader or mid-cap IT names like a Mindtree, etc., they also were a big drag in today's trading session. That said, it's the raw material cost pressures which are really coming to the fore. I mean, we heard that from most of the companies as recent as today, when you had Asian Paints deliver its numbers, wherein they've seen a steep inflation in raw material prices, and that clearly impacted their margins. They fell short of market expectations. The stock dragged quite a fair bit, dragged down with it the likes of a Berger Paints as well. In fact, Berger Paints lost about 6.25%, and Asian Paints was the biggest drop on the index today. It was down about almost 5% in the session today. Not just that, look at Havells as well. For a second consecutive day, after them saying that the margins across most segments except lighting fell because of the raw material pressure, Havells was another big drag today. It was down about almost 9%. You had L&T Finance, Mindtree, Coforge, which were all laggards in today's trading session. Similar was the commentary coming in from Unilever as well as Nestle yesterday. Jubilant Foods was also said that, they are seeing inflationary pressures, and that's going to likely play out in a more exaggerated manner in the next few quarters' performance. Or for that matter, Unilever, which we already know has talked about inflation in raw material prices, which they say is going to continue to be a challenge. So this is one aspect that really came to the fore in the second quarter earnings commentary from most managements. Having said that, there were a few pockets of green which continued to hold out, and banks was it yet again today. Much unlike yesterday, wherein SBI as well as BOB took the lead, today it was Kotak Bank, held out by 4%. And picked up along with it, or put on more weight for a BOB as well as PNB, Can Bank, etc. as well. That said, you had RBL Bank, financials like M&M Finance, Shriram Transport Finance, they also held out. And then, of course, there was Tata Motors, which looked very smart. But on the dragging end, there were far too many losers. Reliance ahead of its numbers tomorrow post-market hours was a big drag in excess of 3%, in fact 3.5% at the session lows. So one really needs to wait out and see. It's too early to call whether this is the much awaited big correction that's going to transpire. Looking at the texture and the way the fall is steep and the swiftness of the fall, it seems to be the case. But again, that's something we'll have to wait and figure out in the due course of the days.